Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is March 27th, and we have Brent crude oil barely with a heartbeat this morning at $73, and essentially no reaction to the sort of further indications overnight that indeed the world is moving closer to a trade war, with the announcements from the Trump administration that they were imposing a 25% tariff on all imported cars. No more cheap Mercedes in New York, you would say, but hey, have Mercedes ever been cheap? Kate Durian, editor at large with Meese, welcome back to the table. Kate, my question to you this morning is, are oil prices just immune to this growing bark about trade war?
I don't think they're immune. I just think they don't know what's going to happen next. So I think people are sort of in a wait and see.
25% tariff on imported cars
Yeah,
next
well,
Tuesday.
I know, but it's going to take time.
Pretty specific.
Yes, but I mean, it's going to take time to filter through, right? And how does that impact the price of oil? Well, I suppose it just people won't be buying expensive cars. So I don't know what the impact is going to be. It's too early to say, but it's not going to be an immediate impact. So I guess, it's wait and see. Is he going to delay it like he's done with, the other tariffs? We announce tariffs and then we delay, we give. So I think it's going to take a bit of time. But when you're imposing these kinds of tariffs and you're hurting your allies in Europe, I mean, Europe is the largest trading bloc in the world, right? So it doesn't help if you weaken European economies, because that drags down, global economies. So it's bearish in many ways, but also, that this kind of volatility, if you get volatility and uncertainty, is good for oil traders and commodities traders, because
Well, that's the point, isn't it? I was at the FT Commodity Summit in Lausanne for the last few days, and the point that everybody was making, that the Gunvor chairman, and most notably on the stage, that even with all of this noise, there actually is no volatility. I mean, we're looking, case in point here, Alan Gelder from Wood Mackenzie. Overnight, we've got a situation of this big noise on tariffs, and there's barely a move in the oil price. Why do you think oil prices are immune? And let's assume that, this time I'm serious, says the big bad wolf.
Well, because it's all baked in, isn't it? I mean, the threat of tariffs, the sanctions on Iran. Venezuela's the new one, which I suppose balances the bearishness and it makes it a bit more bullish. But I didn't mean volatility. I meant uncertainty.
Okay, yeah, that certainly, that word was used a lot. Let's bring in Alan Gelder from Wood Mac on that. Alan, your thoughts, sort of picking up the same theme.
Sean, I think we've seen lots of words. We've seen lots of words and actions then being rolled back. So what actually is going to impose? When is it? Something like trade tariffs on commodity goods, that does have an impact on the oil market eventually as things ripple through. And I think you've got the inability to take a position. And so the easiest thing is not to take a position. And so largely we see, I suspect a lot of people, given the uncertainty, are just sitting back because it's too difficult to make a call. And so if there's not a direct linkage to the physical barrel, they're immediate, then actually there's not a lot of people willing to take that risk and that exposure. So
But
it's
why would you stay long? That's the question. I mean, if you follow through that point, the why take the risk? Why not short? Why not move? Why wouldn't you have a fall in that scenario? I mean, less liquidity. What's the prop up in this equation? What's the pillar under this non-moving $73 oil price?
Yeah, that's a good, Sean. That's a good question. I'm not sure
I occasionally have them, Alan, just occasionally. You know, we after I've learned a few things after 1,000
I didn't mean
plus
to be quite so
podcasts.
dismissive in that tone, mate. Actually, sorry, but that's the way it came across. I don't think we know really. I think there's a bit of decoupling. It's not something that will have an immediate reaction on the economies. It may well be not. It may well not come into force. It may well be revoked or adapted, and so I think there's just that uncertainty means people don't see a huge need to change. There's a general feeling that tariffs are going to increase, going to be deployed. And you could almost say this one was kind of announced. It was kind of coming. It's just part of that background storyline now.
Let's welcome June Go. Excuse me, June, if I haven't got that pronunciation.
You got it right. Go.
Okay, thank you very much. Of Sparta Commodities. June, is it a situation where, and we've been in this case for some time, that there's just such a collection of idle supply available that it's just very difficult to spook this market because there's a ton of crude on the sidelines ready to fill any gap that might occur. Your thoughts on this unmoving oil price?
I'm actually I think there's a lot of inventory in the world that is kind of short actually globally. We saw, for example, EIA report come out last night. Crude inventories has dropped by 3.3 million barrels per day. I think we are looking at a very short overall inventory market globally. And oil that is sitting around are those sanctioned barrels. Obviously, nothing much from a trader perspective since the market is in backwardation. There shouldn't be any normal trading holding contango barrels. So I feel like the market is having a flaw with all these low inventories in the world.
June, just to follow up on that, I mean, one fairly significant development this week was the U.S. targeting specifically the sanctioning of a Chinese teapot refinery for importing Iranian crude. And I think it was the head of shipping for Mercuria at the FT Summit in Lausanne this week, sort of noted that as possibly the most significant event, the sanctioning of the onshore infrastructure rather than up till now the ships, and that ports and refineries start to get into the target of clamping down on this trade of sort of sanctioned oil, quote unquote. Your thoughts on that event? How will the Chinese react to that? Is it as significant as the Mercuria head of shipping thinks it will be?
I think we've got to differentiate the kinds of teapots available first, right? They are, number one, independent refineries. They are not state-owned refineries like Sinopec and PetroChina. And within the framework,
I'm sure they still have a telephone number that I'm sure they still have a telephone number that the state can call and say, hey, I think it would be a good idea to either keep importing Iranian oil, or I think it would be a bad idea to keep on importing Iranian oil. I mean, in that sense, are they immune from such a phone call?
I guess they shouldn't be. If the authorities step in to clamp this activity for the greater good of the country, because ultimately it might mean 25% across all goods into the US, and that's huge impact. So indeed, there could be a probable situation where the government and the authorities step in to stop these teapots from procuring the Venezuelan barrels.
Well,
and inspire
I
activity
think
of flow.
there's certainly there couldn't be more BYDs on the streets in Dubai where I live, and I think there's going to be more after this move. Kate Durian, $73 Brent a few weeks after OPEC Plus decides to increase supply from next week. You would think OPEC Plus would be pretty happy with the state of play. Your thoughts, and likely to continue on this path of increasing supply, Kate?
I mean, they have given themselves the option to sort of roll it back if necessary. But if you look at the amount of compensation by the overproducers, and it's interesting that Saudi Arabia and the UAE have sort of put themselves in there as well as sort of compensating for. And in fact, we don't even know how much the UAE is producing above its quota. It's quite a lot. So that will sort of balance out if it is implemented. If the compensations are implemented by the likes of Iraq and
well, why? Let's just go to that node. Why do we think they're being so loud, if you want, loud and proud about these compensation cuts? They've been lingering in the background for years now. They seem to have been pulled out of the closet and shined up a little bit on this occasion.
Well, I mean, they have actually put out a table saying, this is what everybody's going to be doing. So if you look at the numbers, they basically, balance each other out. The slight increase that's going to start coming in April, about 185, and it's just under 200, the compensation. So you add these two together. Well, you sort of look at those two and you say, okay, so basically you've got net no increase, really. So it's, well, no, actually.
So hence the oil price is supported.
They're going to be reducing on one side and then increasing on the other. So it's basically a signal saying,
do you give it also take it away? Yeah, we're not flooding the market. That definitely seems to be a punctuation point of any nervous bearish moves. There is still a desire to tighten on this. Alan Gelder, there was added sauce to the comments by the US president in his tweeting policy making over the night, and that included, warning his best buddies who have stood side by side over 80 years in all sorts of situations and wars, that if Canada and Europe dare to gang up and form a consolidated policy against the US, there'll even be extra pain to be thrown at them. My question on top of that, or inside that, Alan, is where is Europe's appetite, do you think, for this fight at the moment? There's a lot of vulnerability, it seems, that one would see in the last few weeks around Europe's security with the sort of breakdown in relations with Washington. But where does that intersect with the trade war appetite in Europe? Are they also, like Donald Trump, sort of waving their fist and saying, well, we're serious too this time?
I think they have a dilemma, Sean. There's a real anger or dismay with what's happening with Ukraine, how it's being treated, the fact that Europe is effectively sidelined, the comments from JD Vance on that Signal group about the attacks for the Houthis, about pathetic, and that's not been well received. So there's an acknowledgement that Europe is going to need to pay for more of its defence, be more assertive. The challenge is the European economies are not particularly strong. We tend to have run surpluses with the US, and the last thing that the European economies need right now are tariffs being imposed on them because they're in a position of relative weakness. I think the challenge for the politicians is, can they take the populations along with them to say, actually, guys, is the equivalent of austerity, so we can have a more assertive stance in the world against the US. You look at the UK Spring Statement yesterday, there isn't a huge amount of appetite from the voting populations to do that. So it's a very difficult tightrope for them to walk, and so one that's easy to fall off.
And as you said earlier, it's only going to get tighter when the pain of the tariffs start to fall to the ground rather than sort of stick on BBC headlines.
So are we willing to pay for our principles? Oh, that's tricky. Yeah,
That's
very
tricky.
tricky. Yeah.
It is, and a strong euro at the same, or stronger euro at the same time. And of course, Germany does love its weaker euro to sell all of their yummy stuff. June, looking at sort of a wider sense of the oil markets, we've had some weird anomalies recently where Platts Dubai has traded at a premium to Brent. We've had a big appetite for heavier crudes and lighter crudes that seem to be in ample supply. June, could you give us some sort of insight and breakdown to where the market balance is between these things? We've seen, obviously, the U.S. plan to shut down Venezuela, and Chevron in Venezuela, the source of critical heavy crudes, that hasn't been implemented yet and was indeed extended by a month or more. Where are we in the balance at the moment between heavy and sweet?
I think you said it quite clearly that all the impacts of the tariffs and sanctions have been geared towards the heavier crude slate, the Mexicans, the Canadian events. But we're also seeing other bullish factors for heavier crude demand. One of them is the ExxonMobil Singapore residue upgrader project that will likely see a switch of about 200 to 250 KBD of WTI equivalent into sour crudes. Of course, we have the US crude tariffs into China that would affect about 200 KBD of flow, largely WTI and a little bit of Mars. This has to be replaced with other crudes like CPC, maybe other heavy distillate crudes like WAF. We've seen Tupras deliberately abstaining from buying Russian grades and is now in the market for heavier distillate-rich crudes from Guyana and Libya. And also Orlen reportedly buying Johan Sverdrup, likely to replace the unexpected Druzhba interruptions, which are Urals quality crude. So all this is, when you look at it in terms of price, this bullish Dubai and global sour crude premiums. And this Brent Dubai EFS will likely stay narrow once the geopolitical premiums on the Brent side fade. And also, it's also bullish high sulfur fuel oil cracks.
Just to follow up on a similar question to Alan there, obviously European appetite for a trade war is not great, and they're struggle at the best of times to hold 28 countries together. What about in Asia, do you think? We have China obviously is on the target of a tariff fix, and that's already started with the US and long standing for many years. What about the rest of Asia? Where's Asia's appetite to take a reciprocal approach, do you think, to the tariffs that are now being brought out, on April 2nd being the big D-Day as announced by the US government?
I think there's not
No,
a great
I'm just going to June on that. Sorry, Alan, I just want to get June's response on that. A perspective from Asia, appetite for this trade war to capitulate or to reciprocate?
We've seen China generally quite restrained in any of the retaliation actions when the tariffs imposed. So I think China will try to still manage and not escalate the trade war as much as they can. But it's getting increasingly hard because we can see that all the measures that are in the last week or so is really just targeting on specifically China. So I think at some point, national pride might come about, and we need to do something about it.
Well, it certainly does. I mean, the position of China as compared to previous occasions where they were sort of reacted and retaliated, this occasion seemed quite measured, but definitely specific, targeting agriculture, for example, which they know that the farmers in the Midwest of America will feel, and they will take action, or they will certainly lobby the U.S. government to rescind, because of course when you target specific, like the Europeans did, they targeted bourbon whiskey or something like that. When you get into rather than the blanket stuff, and you get started targeted into pain points, that can have an impact. Let's go to the survey question and get a sense of the wider room here on this point. Oil prices are immune to trade war due to massive idle supply available. True or false? Oil prices are immune to trade war due to massive idle supply available. Kate, looking forward as to where some issues could emerge to kind of jolt this somewhat sleepy market out of its current tight bandwidth, low 70s, if you like. Is this sort of looming face-off between Tehran and Washington? We have now well reported that the US government has essentially given Tehran a 2-month warning to essentially capitulate on its nuclear program. And there has been some sort of messaging geopolitically across the region since that letter landed. Your thoughts on where that could go and how that is likely to play out?
Well, I mean, I think Iran is in a very difficult spot. They have been weakened regionally because of, what's happened to Hezbollah and what's happened to Hamas and their proxies. The Houthis are being hammered. I think they're getting the sort of the signal from the US on the Houthi side saying, either you stop them from attacking ships in the Red Sea, or we are going to hold you responsible. So it's sort of like a double whammy. Their currency is slipping. So I think what they say in public, what the Iranians say in public, and what they might do to sort of ease tensions is another, behind the scenes. So I think there have been offers to hold talks either in the UAE, maybe indirect talks. I mean, the funny thing is that it's the Iranians who've refused to have direct talks with the US, not the other way around. So we'll wait and see what happens. But I think it's, it's been a threat. It's there. Obviously, there are certain players.
If you would look at the past, Kate, given the last year of sort of military events in the region, in the past, Iran has had some cards, proxy cards, to kind of, show a willingness and ability to destabilize the region. Now losing Syria, a major card, losing Hezbollah, a major card, not losing completely, but ultimately seriously, removed from their deck. What cards do they have, do you think, in which to play here? I mean, that's a question that I struggle to see at the moment.
I don't think they have many strong cards to play, but at the same time, when you push somebody against the wall, they might do something really desperate. People keep talking about the Strait of Hormuz, what they might do there. I mean, they have started putting missiles on these 3 islands, up at Greater Toom and Lesser Toom and Abu Musa in the Gulf, which is sort of, a warning whether they, the Strait of Hormuz is always under threat. It's never really been shut down, but it can cause a nuisance. It raises insurance rates. It makes countries like the UAE and Saudi Arabia sort of shift. I think if you look at the UAE, they're diverting more of their crude oil exports through Fujairah, away from the Strait of Hormuz. So I don't think they have that many cards to play. But again, they are carpet merchants. They know how to play the game. They play a long game, and they've learned how to live with sanctions. But I think the economic situation at the moment is pretty dire. And if they cannot export their oil, I mean, they will find ways, but it won't be the 1.5 million barrels that the sort of, which was the highest.
Well, that's the critical question on from the oil market's point of view, is not really will the US impose its maximum pressure, which it's obviously doing. The big question is, what will China do? China, essentially the only market for Iranian oil. Will China stop buying? That seems to be, and this target of the Teapot refinery will give us some indication of that. Alan, the other side of the coin, as we talk there with Kate about something that could really destabilize the oil markets, a march towards a face-off between Iran and the US/Israel. In Europe, the opposite. We're trying to march towards a ceasefire between Ukraine and Russia. Your thoughts on the outlook for that after initial, massive sort of Trumpian enthusiasm that seems to has, as they say in rugby, been punted to the long grass a little bit. Your thoughts on where that goes as being a likely big mover for the oil markets on the bearish side rather than conflict in the Middle East on the bullish side?
We don't see anything happening that quickly. Yeah. If anything, we're kind of categorizing it as like a forced peace, where things are imposed,
like a what? Sorry,
a forced peace, where
Right.
it's sort of imposed on Ukraine, it's kind of imposed on Europe, which probably means Europe doesn't change its sanctions regime very much. Probably Europe doesn't accept Russian crude or products, very limited gas. So there will be some easing of sanctions because of US-Russia engagement. But in the immediate term, that probably doesn't have a huge impact on sort of Russian supplies. It will certainly lift Russian revenues because they don't necessarily need the dark fleet anymore. The Russian crude doesn't necessarily go to India. So you can see it will certainly boost Russian revenues, but probably not necessarily volumes. A test will be the investments that go into Russia. How long does that take to increase supply, and how tightly the Russians adhere to this OPEC plus agreements they've got, because at the moment that's something that they're reasonably committed to as a means of balancing the market. So even if there is a forced peace, we don't see it being hugely disruptive to the oil market in aggregate, just a boost to Russian revenues.
The FT summit again, I cited because obviously it was there last few days, and some of the biggest players in the oil trading world were present, all the CEOs of the independents, and they were signaling essentially two things. One, sure, we're willing to go back into Russia when all the sanctions are lifted, but B, their general view was that we're talking at least a year to two. Even if you get to ceasefire, you still have like 16 plus layers of sanctions: European, American unilateral, British unilateral. I mean, this is a thick layer, and you have already through this period established new trading partnerships. 25-year LNG contracts between Germany and Qatar, for example. That things can't be reversed that fast. Your thoughts on that timing idea, even with the most optimistic expectation with ceasefire talks?
I think that's fair. Yeah, we don't see something happening very quickly at the moment, with considering how we model in perhaps easing of US sanctions on Russia in 26 during 26, rather than anything happening particularly quick. It's complex.
Yeah, it is. June, last word to you, just sort of picking up on those comments by Alan vis-a-vis the sort of settlement or not of a deal in Russia, Ukraine, and the oil flows into Asia. We've seen obviously a Russian crude find its home in India, in China, and we have that idea of the dark fleet and discounted barrels, but we also have WTI flows into Asia. Where do you see those going? Will India and China continue to be big importers of Russian crude?
Well, India will basically buy the cheapest crude available at the market. So if Russia is cheap, they will buy, unless, of course, there are further sanctions, just like the Venezuela ones, that might turn them away. There's WTI is very cheap right now. It's trying very hard to clear into Asia, but it's struggling to, and it's finding its way into Europe for the marginal length. So if there is an opportunity, probably India will want to take that. Obviously, China won't touch WTI because of the tariffs. Yeah, and I think generally just that the WTI really is kind of the swing barrel available in the oil market right now, and where it goes to will be key for all the market players.
What do you think will determine this moment or end this moment for WTI, in the sense that what's creating it and what could possibly bring the market back to sort of normal, where the sweet barrel is a premium?
We need to see the sour barrel getting less tariffs,
less sanctions.
Less sanctions.
More
yes.
ships pulling up in Venezuela. More ships pulling up and loading in Iran.
Yeah, I just can't see where the refineries will get those sour barrels, because ultimately many of these refineries are built with the design crudes of heavy sour crudes. And they can't just switch to an entirely light feed simply because the configuration can't cater for it. So the pull will be strong.
Which makes me think that, I mean, that's the irony of so many of these things, these tariffs, that everything is a sort of own goal in a way, isn't it? The idea that, a tariff is a tax on your people, and similarly, if you stop importing Venezuelan crude oil, when all of your refineries on the Gulf of Mexico are structured for Venezuelan or for heavier crude, it's really an own goal, and so I think there's going to be some wiggle room in that Venezuela deal. Chevron is a powerful company with a lot of lobbying power, and I think that keep an eye on that space. If Venezuela's leadership was willing to take 50,000 illegal migrants back to Venezuela, I think that could possibly seal that renewal for Chevron. So I think that's a space to watch. Oil prices are immune to trade war due to the ample idle supply. 2-1 in this room think that's true. We'll have to see if that continues to be the case. As we have sort of articulated here this morning, there's a lot of talk and noise and shouting. Where does this all come to the ground? Well, I think we're going to find out in the coming days. As one of the things I thought of the many sort of quotes up in Lausanne this week was a CEO of a trading company, an American one, who was actually saying, "You can't believe the nightmare this has been for our accountants. We now have to calculate," because apparently the Canadian sanctions were in place for 3 days, and they have to figure out whether they have to pay taxes for those 3 days of that brief window in which the tariffs were actually live and legal. So they're going bonkers ultimately and wasting a lot of time and resource in this flopping. It's one thing to deal with the tariffs, another thing to deal with the flip-flops. So that continues to be the headache, if indeed that continues to be the habit and pattern of the Trump administration. Listen, we'll have to leave it there. As I said at the top, we haven't managed to move the oil price. It still doesn't have a heartbeat after 30 minutes. We all get a D. Go back and do better. Alan Gelder, thank you so much. SVP Refining, Chemicals and Oil Markets at Wood Mackenzie. June Go, Senior Oil Market Analyst at Sparta Commodities, and the one and only Kate Durian, Meese Contributing Editor and Non-Resident Fellow at the Arab Gulf States Institute in Washington. Thank you all for your time and insights this morning. We'll catch up with you all again soon. Take care.
Thanks, guys. Enjoy the rest of your day.
Cheers.
Thank you.
All the best.
Bye-bye.